You know, it's been exciting 2 days. 50+ startups, a lot of technology. Very exciting. You know, life was much easier 10 years ago. Insurance was a marketing game. You sold the policy, and you can just, sit and wait to see the money flowing in. Unfortunately, it's not the case anymore. Customers are demanding, markets are down, and regulations are knocking on your door. But what when you do, when you get to times like this, you go back to the basics. What is insurance? Insurance is assessing risk based on analyzing data and making smart decisions. And this is the reason why we decided to open Atidot. My name is Dror Katsav, and I'm the CEO of Atidot, the first data cloud that understands insurance. If you sit there in the cloud, you probably know that insurance companies has the most varied data about the customer. We know his demographic, we know his age, his gender, his financial habits, his smoking habits, his medical history, and many more. But is this data available for us while we make a decision? Is this data available for you? Let's do a quick show of hands to gauge ourselves. Where do we sit? So think you insurers in the crowd. When you make a decision, how much of the company's data is available for you? Is it 100%? No 100%. Is it 80%? 60? 40? 20? Studies that were undertaken this year shows that 20% of data is available when you make a decision. Let me repeat that for a second. 80% of your data is just costing you money. It doesn't work for you. This is why we at Atidot build this platform that helps you make your data work for you. In the past year, we assembled a team of data scientists, software engineers, actuaries, and build one team to build a data platform that relies on industry-specific knowledge, insurance-specific knowledge, rely on sophisticated machine learning, and optimizes on solving insurance long-term issues that you deal with daily. Let's show you a quick example. Basically, it's a data coming from a life carrier with few long-term products. And the one that we are interested in is a term life product that basically the company wants to understand the lapse rate, because lapse rate is a key factor in their valuing this policy. And as you know, they have tons of systems. So we developed this tool. This tool is going into the operational data, at the raw data, and tries to understand based on machine learning what's in this data. So we plugged a few of the data sources. This looks like policies. And what the system is doing is trying to understand automatically what's in there. So you see that we plug the data, and the system using machine learning understand what's in there. So we can easily show you that the policy number is the policy ID. But the ID is the ID, and the inception date is a sell date. How can we tell that? Because it's easy to recognize that this is a date. But more important than that, sell date usually is between Monday and Friday. Unlike date of birth that distributes uniformly, or unlike date of payment, which is usually the first. So we can help them extensively with analyzing the raw data and do all the cleansing and onboarding quite automatically. Once we've done all that, we're building a view of the customer coming from all those sources. We augment it with external sources. For example, because it's a term life product, we know the address of the customer. So we have all the geographic location, demographics, housing prices, et cetera, et cetera. And if it's investment policy, we can add in marketing data, we can add the interest rate, the market index, and so on. Now we run tons of models on top of that, and we've tried to find the best fit to understand lapses. In this case, what we look is marginal lapses. So you see on the bottom axis, on the x-axis, you see duration of the policy, 0, 1, 2, 3, 4, 5, and you see on the y-axis, marginal lapses. So we find a pattern that shows you the lapse. You can see on this side the value of the policy. Okay, this is nice, but what is interesting to the company is that we can show them what drives lapses for year 1, 3, and 5. It's not the usual case where the company thinks themselves what might drive lapses and try to analyze that. We take all data that is available. And once we have all this data, we can plug it in, and the system automatically picks the relevant pieces that might affect this decision. So you see that the factors that drive lapses for year 5 are much different than the ones in year 1, which makes sense. But now the question is, what do I do with that? So this is why we developed an app that runs optimization on top of that. We resample the data and make sure that we can give you actionable decisions to make on top of that. For example, what happens if I skew my male-female distribution? What happens if I skew my age distribution? I skew to the older ages. Lapses are down at some places, up on other places. If it changed, what happens if I change my male-female ratio in the profile, in the portfolio? Now let's look at other factors as well. Let's look at how do I change my marketing budget? How do I adjust my pricing? And so on and so forth. And let's pick a strategy. Once we decided on a strategy, let's score each one of the policies based on our new strategy. To conclude, in this way, you can use machine learning without even knowing machine learning. It relies on heavy machine learning, tons of regressions, models, AI models, machine learning models, actuarial models, statistical models, you name it. But you don't have to know that. You just have to know that it looks like Lapstrip looks like. And you get much better insights because of that. Feel free to ask me more questions at our booth. Thank you very much.